Hi everyone, today let's take a look at the steamy inflation data and the position of the Fed, and then we'll take a look at our first bank failure of 2024. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So steamy inflation putting pressure on the Fed. We've been talking about it for a few weeks at this point, but I really wanted to highlight it here because I do think this is an inflection point for markets. We've been watching the Fed dot plot and it has come up significantly, potentially down to 1, maybe 2 cuts for this year, down from the 3 originally put out by the Fed, and definitely down from the 6 initially thought from markets. And then we saw 3 months in a row of inflation data coming in a little bit higher than expected. And now you can see markets are pricing in a 1 in 5 chance of a hike within the next 12 months, which is not a super high likelihood, but that is a dramatic shift from what we had been seeing and the messaging from the Fed. Markets went way higher when we got that dovish speech from Jerome Powell. I also like this article because it seems to be a little bit of a weekly roll-up. Talks about what's on the calendar for next week. You can see Japan unemployment data, definitely interesting. Couple of earnings here with Amazon, 3M, Coca-Cola, Eli Lilly, McDonald's, Starbucks. And then we do have the FOMC this week. Probably going to be a little bit of a non-event in my opinion. Everyone expects a pause. They might come out and change their language and go towards pretty much what all of the other voting Fed members have said, potentially 1, if any, cuts this year. But looking at why does this matter, you can see with the resilient economy and sticky inflation, we've seen the dollar going much, much higher. And we've been looking at that on the charts, and we'll take a look at the charts again for the dollar here today. But as we noted on the Thursday video, we got GDP numbers that didn't come in as strong as expected. So the economy is slowing, still growing, but it is slowing. And then we're starting to see PMI numbers going a little bit higher, 51.4 versus 51.3 in the previous month. So economic data, they are growing a little bit. And then we have the European Central Bank saying that they are still on track for a soft landing, which I think is a little bit questionable at this point. And then they mention the significant gains that gold has had over the past couple of weeks, which I think is also pointing to the fact that inflation is probably going to go higher. The Fed is in a tight spot where they can't really raise rates without crashing the economy, and potentially the economy is going to decline anyway with those higher rates, but they don't have a choice because of inflation. And then moving over to the bank closure, we did see Republic First Bank closing, not First Republic, Republic First Bank, and the FDIC seized the bank, and now they are fully in control of this company. It's not a very big bank. It's about $10 billion in market cap, but it is a regional bank, pretty much New Jersey, Pennsylvania, as well as New York, fairly small. You can also see here Fulton is assuming all deposits, approximately $6 billion in assets, $4 billion in deposits in January. All 32 branches will reopen as branches of Fulton Bank. And really it seems like a little bit of a non-event. It is a little bit concerning that a regional bank is closing again here in 2024. We had a couple last year. This is the first one of the year. It's relatively small, especially compared to some of the ones we saw last year. I think Silicon Valley Bank was on the order of around $200 billion, which is significantly larger, obviously, but I haven't really seen this making its way around the financial publications, but just understand that it did happen. Otherwise, let's get into the normal data here. Fear and greed finishing the week at 42. We can see this is still trending a little bit higher. Probably going to make it at least to the 50 line, so maybe 1 or 2 more days of some bullishness, and then we'll see what happens. Neutral here on momentum. Strength dipped into extreme fear on that Friday session, and this is for the NYSE. Definitely interesting to see that one going lower, while the rest of the indicators are kind of hovering here in regular fear. Market volatility in neutral, safe haven demand still in fear. You can see on volatility, we're getting very close to that 50-day moving average at 14.86. We'll see what happens there. And then junk bond demand still hanging in there very strong in extreme greed. Moving over to the AAII survey, you can see the bulls are coming out of markets here. So we're down to a 32. Neutral has stepped up to 33, and then the bears are basically flat. So bears are above historical averages as well as the neutral above historical. And the bears are starting to fail here. And this is another driver towards why I think we're probably going to see a double top or a lower high. I just don't think the bulls are committed to keeping this rally going. And then once we see the bulls get into extremely low levels, well below historical averages, then we'll start to use this as a contrarian metric. Moving over to seasonality, you can see we have 2 more trading days here for Monday and Tuesday. Typically, those are either flat to down a little bit. Election years, they're flat or relatively up. And then traditionally here, this is the start of the dip into May. Remember, everything is a little bit shifted. We got the low a little bit late. We're in this rally period here, so we didn't get all of those days of rally, and I think this might carry over into the Monday, Tuesday potentially. And then moving over to May, you can see it is a negative period seasonally, at least up until that third week. We'll see how that plays. But if this is still shifted over, we could see this dip start after that first or second week of May, and then the rest of the month in theory would be bearish at that point. Moving over to the earnings calendar, not much here on Monday. Welltower, Domino's Pizza. Looking at Tuesday, we got Amazon, Eli Lilly, Coca-Cola, AMD, McDonald's, Starbucks, American Tower, PayPal. 3M is in there as well. A bunch of companies on Tuesday. That's going to be a big one. We got Clorox in there, always interesting to see from the consumer staples perspective. And then for Wednesday, we got MasterCard, Qualcomm, Pfizer, CVS, DoorDash, Marriott, Estee Lauder. A couple of good companies in there. Yum Brands, always fun to watch. eBay, definitely interesting in there. And then for Thursday, you have PayPal, ConocoPhillips, Amgen. And then finally here for Friday, you got Hershey's. And that's just about it. Moving over to the economic calendar, nothing here for Monday. Tuesday, CPI for the Eurozone. It feels like they do that more often than we do. And then you can see Chicago PMI, consumer confidence here at 9:45 and 10 o'clock on Tuesday. And then looking at Wednesday, we do have ADP non-farms. So this is an employment week. And then you have ISM manufacturing PMI, ISM manufacturing prices. JOLTS report there at 10 o'clock. And then we got the FOMC statement. I would expect this to be a little bit more hawkish than what we got the last time. It was very dovish before. But now we got another month of higher inflation data. We'll see how those comments have shifted and where the dot plot is now. And then for Thursday, not much, just initial jobless claims, Fed balance sheet as always. And then looking at the Friday, we have unemployment rate, non-farm payrolls, all the biggest jobs data, as well as global services PMI, global composite PMI, non-manufacturing PMI, and non-manufacturing prices. So Friday still has a lot of data. So big week on the economic data front. Moving over to Max Pain, you can see call wall here at 510, put wall here at 500, Max Pain right in the middle at 505, stock price 508. So that gives you just a little bit of downside potential to that Max Pain area. Total options, not very much, less than $1 million. Put call ratio, still relatively normal there at 2.36. Moving over to the chart, starting off with the S&Ps here, you can see on the monthly chart, we are still hovering right at this trend line. Trend support is 5,069. Momentum on the monthly chart rolling down. Does seem like this could be a turning point here as the month rolls over. The month is going to close this week. You can see we have less than 3 days on the charts. And if this is like that first candle, you can see we come here, test that level, overthrow it, bounce off of this lower trend line like we did. And then we get that second follow through where we go lower, end up wicking a lower low. Then we have 1 month of positive, but then this ends up carrying lower. This was the move down from the highs in 2021 all the way to the lows in October of 22. These monthly chart moves, obviously, they do take a while and it could be significant, but it's also worth noting you can see this first dip into bearish territory, bearish candle here in September of 21, and then after that we got flat momentum, but we did see higher highs before we got that bigger breakdown. So something to pay attention to, but right now this does look quite weak in my opinion. And if the month closes like this, I would expect it to go lower next month. And then moving over to the weekly chart, you can see that 21 EMA, 3 weeks in a row of bearishness, hitting that 21 EMA. Bounce from that level, got the 9 EMA there at 51.40. Momentum is still bearish, and it does look like this is going to establish a lower high or a double top at best. I think it's going to be more like this. So you got 3 weeks in a row of bearishness, 2 weeks in a row of bullishness, establish that downtrend line, break down further, then we'll see what happens. But realistically, I do think this is going to break down ultimately. We're just seeing that short-term bounce in my opinion. Let's go ahead and extend out this trend line here. Pretty much right there. So stuck between the trend lines. We'll see if we can overthrow that to this upper trend around 52.28. Certainly seems possible. 1 more week of bullishness, and then you would expect bigger breakdowns in my opinion. Moving over to the daily chart, you can see here on the SPY, you can see that down move, bounce, and then we had the higher low setup, rally through. You can see those trend lines, resistance up around 514.50 and then a little bit higher there at 515.60. We'll see if we get into that zone. Probably going to hit that trend line and then break We'll see how it plays. Right now, momentum and RSI both look pretty good, so certainly possible we get resistance here. Or best case scenario, like I said, in my opinion, we do get a double top. That would be 524.23, which does fit with the levels that we saw on the weekly and the monthly charts. So right in there, certainly possible. And that would be a double top setup, in my opinion. This is going to be strong resistance. And then if we broke down, this would be your midpoint here at this low around that 495.73 level. And then if that structure breaks, then we are headed much, much lower, in my opinion. Moving over to the Tasty charts, you can see we did take out those ATRs here on the monthly chart, hit that upper ATR band. So this is technically bullish conditions, but your bullish support on the monthly chart would be all the way down around 431.24 on the SPY. So could absolutely go much, much lower. My guess is that you'll probably see some support around that 476 level. That's the high here from January of 22. But if these two, and then some support here as well around that 458 area. But if those two levels break, you have the ATRs there at 431. So monthly chart still looking bearish. You can see volume weighted MACD stepping down as well. And same thesis here from that January peak. Started to see weakness in the MACD. And then eventually it did swing into bearish conditions. So certainly could go a little bit higher, just like we did here. Got that first step down, couple of months here, got some more bullish conditions, and then we started to see this fade pretty significantly. Markets were going lower, and then we culminated around that October-November area, and then we saw this volume-weighted MACD start to gain strength. So again, could go a little bit higher. It seems unlikely, but this is starting to show those initial signs of longer-term weakness. And then looking at the weekly chart, similar thesis. We were overbought. We're definitely selling off. Weekly support would be that 458 area. If we did swing back to the upside, you have that upper ATR around 529.46. That would be your resistance here. And that would be very close to the previous high. Might overthrow it just a little bit. But remember, momentum on the weekly chart still bearish, still bullish conditions with those ATRs, but definitely looking like a topping pattern. And then looking at the daily chart here, you can see that breakdown. We were not overbought on the daily chart. Saw that breakdown to the lower ATR band and that 89 EMA. Saw the low, higher low setup. Expected that breakout, and we definitely got it. ATR resistance here is at 517.97, so that is a little bit lower than we're projecting for that double top. If we get it, that's why I'm saying I think we could see a lower high, but a double top is certainly possible, especially with the strength that we're seeing here on the MACD as this continues to roll to the bullish side. Moving over to the NASDAQ here on the monthly chart, very similar setup, which is definitely concerning. You can see we had that month of bearishness. Still, we're down 2.49%. We hit that first trend line here. Very important trend line, marks a high here in August, marks a top in August of 23, marks a top all the way back here pre-COVID. You can see we almost touched that level pre-COVID. We didn't quite get there, but we are there right now touching this trend line, and you can also see momentum continuing to roll to bearish. We'll see how this plays out as the month is set to close this month. You can see it a little bit better there on the weekly chart. Big week down, 5.36%, slight bounce here. Almost 4% higher. Momentum still bearish. RSI, again, probably going to move a little bit higher, test the SMA, and then break down. That's what I'm looking for, at least in the short term. And you can see that same move here on the Qs. 3 weeks in a row, testing that trend line. Critical zone, tested it here 2 weeks ago, tested it here last week, and then bounced. We'll see how it plays. Momentum still bearish here. And then looking at that daily chart, you can see that waterfall sell-off to the trend, move higher, higher low, rally up, 21 EMA, 433.23. Haven't touched that level yet. I would expect to. And then you got the 55 EMA there at 436.39. So again, a little bit more room to the upside. Momentum continues to roll to bullish. With the way that this momentum is swinging, it does seem like we could get a double top, maybe even an overthrow here on the NASDAQ. So if we see a double top in the SPY, the NASDAQ might throw a slightly higher high, but we'll be watching to see what the SPY is doing. That's usually the better indicator. Moving over to the Tasty charts, again, you can see we overthrew that upper ATR, pulled back to the 8 EMA, that's at 410.57. You can see we're still in bullish conditions. So we went to bullish conditions back here in December, took out those ATRs. We've had 4 months in a row of bullishness. Now we got that one bearish one here, pulled back, still technically a bull trend, but you can see that momentum rolling to bearish just like we saw on the SPY. And then looking at the weekly chart, similar setup, still have that lower ATR as support. That's currently sitting at 401.44 on the weekly chart. And then your next support to the downside would be the 34 EMA at 408.32. So Interesting zone right in here. Looks like we bounced a little bit early. Still looking for that double top. If we overthrow on the Qs like I talked about, that upper band is now sitting at 465.86. So that would be a really substantial up move. That would definitely trigger the bulls, in my opinion, generate a bunch of liquidity. And then if we saw that liquidity dump to the downside, then that could be catastrophic and lead to one of these bigger down moves like we saw back here throughout 2022. And then looking at that daily chart, similar setup. We were grinding sideways. We talked about it for a while. We expected the breakdown. We still had bearish conditions. So your ATR stops to the upside 440.48. And that's more in line with these previous highs. If we take it out just by a little bit, that would be your resistance. And then on the daily chart, your upper ATR band target would be 454.50. So a little bit lower here on the daily chart. That's normal. Momentum still rolling to bullish. Seems like we're going to get a little bit higher highs here on the daily chart, but still waiting to see if that can carry us to either higher highs or a double top. Moving over to the Russell here, you can see we got an up week, 2.7% to the upside, bouncing off of that 200 SMA on the weekly chart. And this is quite bullish. We haven't held that level in a while. You can see for several months in a row, going all the way back here to May of 22. So several years in a row, you can see we've been chopping right along those EMAs and SMAs. And we got a test here back in January of 24, held that level and rallied up. We're testing it again here. It needs to hold if we're going to go higher. And right now it seems to be doing that. Momentum is still bearish, which is concerning. And we're right at this trend line here. So if it's going to break, we have a candle break continuation potentially setting up. Pushing back to that 207 area, certainly possible. And then looking at the daily chart, you can see that same setup, move down, low, higher low setup, held the 9 EMA, looking to push higher. It is finding resistance at 198.75. You can see we tested it here on the 23rd, and then we tested it again on that Friday session. Couldn't get above it, which is a little bit concerning. We're still below the 21 in VWAP. And then overall pattern-wise, you can see kind of a left shoulder head, right shoulder forming, and that would put your neckline right around that 191.89 level. And if that structurally breaks along with the 200, that could be quite bearish. Momentum still swinging to bullish, and you can see the RSI broke the SMA, held the retest, and it does look to be pushing higher. And if this is a right shoulder, then you could potentially get up to that 204.62 level, which means we're still short-term bullish. But if we find resistance there and then start to break down, and then that 191 level breaks, then this could be going much, much lower, potentially all the way down to this trend line here, down in the 170s. Moving over to the Tasty charts here on the weekly, you can see rally up, hit the upper ATR, held that test at the 21, pushed to that second ATR, and then broke down from there. We're still holding that 55 EMA here on the weekly chart. And you can see bullish conditions, 183.69 would be your bearish ATR stop. If that were to get taken out, then you would expect to push down to that lower ATR around 175.90. Right now, it's still bullish conditions, so it looks okay, potentially pushing towards those upper ATRs. If we hit that upper ATR, that would be around 222. That seems a little bit aggressive, especially with what we're seeing on the other markets, but it's certainly possible. The Russell has been lagging for a long time. And then looking at it on the daily chart here, you can actually see we're in bearish conditions on that most recent push down. Hit the lower ATR, and you can see these bands are starting to roll to the downside, which is concerning. That's why my thesis is more in line with the fact we have a low, we have a decent bottom, and it looks like we're going to establish a counter trend rally. But that's all that I think this is going to be. I think we're going to rally up, potentially hit those ATRs, which are at 205.80, find some resistance in that zone, and then you would expect a bigger breakdown to those lower ATR bands, which at that point I think would be trading around that 186, 187 area, which does fit with the overall thesis. Moving over to the weekly chart on the Dow, you can see 3 weeks in a row of bearishness. 1 week here, bullish inside candle. So again, to me, that means we're probably going to see 1 or 2 weeks of bullishness, waiting for that step down here on momentum towards the bullish side. Look for the retest of the SMA, and then we'll see if we get that classic breakdown from that level. So again, we had a high. We're looking for either a double top or a lower high setup, in my opinion. I think this rally is just about done here. Doesn't mean we can't get a couple weeks of bullishness, and it can't be relatively aggressive during this time period. But we'll see how that kind of culminates over the next couple weeks. Short-term bullish still, in my opinion. And then looking at it on the daily chart here, you can see that same setup. Big dip low, consolidation, rally, counter trend, held the higher low setup, waiting for this to continue. Momentum is bullish, RSI is bullish, so everything looks good for the next week or two, in my opinion. Moving over to the ratios here, you can see the SPY Russell was basically flat. Tested that 259 level 2 weeks ago, held a dip low, basically flat. Momentum seems to be rolling to bearish a little bit, so maybe we see some Russell outperformance. I do think that fits with the thesis that we saw on the charts. The Russell does seem to be holding some decent levels in there, but we'll see how this plays. It's still above that 252 level, and you can see we still have this uptrend structure. And then looking at the NASDAQ SPY, you can see we did get a bounce off of that trend line, so we're seeing a little bit of strength here on the NASDAQ. Momentum seems to be swinging to bullish. The trend here in the short term is still down. You can see RSI continuing to make lower lows, with price relatively stable here above that 3.43 level. Eventually, I do think this is going to break down, but it seems like we have at least a little bit more bounce off of that trend and off of that 55 EMA. So Russell outperformance potentially over the next week, and a little bit of NASDAQ outperformance as well. Moving over to SPY divided by the M2 money supply, you can see that same setup. Came down, tested the 21, tested the trend line. You can see this trend line here from the lows in October, tested this little consolidation and the low here in March. And then we are testing that same level here again. Seems like we're getting a short-term rally. If we rallied up to this trend line, that would give you that double top that we've been talking about. Momentum hasn't rolled yet, but RSI making a push towards that SMA. Similar to this move here, where you dip low, push back to the SMA, find resistance, and then you get a continuation lower. So again, right now, thesis, short-term bounce for sure. But then once we hit this upper trend line, I do think we're probably going to see this kind of consolidate down, make a lower low, similar to this move. Whether that becomes a structural downtrend on the longer time frames, I'm not sure. Looking at this one, you can see it really was just a pullback. Structurally, it held. You had the 144, the 55, as well as the 200 SMA all sitting down there, which ended up holding as support. We didn't even test those lower levels at the 200, and we ended up trending higher. So structurally, we'll see. If we were to test the 55 EMA, that's all the way down at 2208. Obviously, that would trend up a little bit here over time as we get this rally, and then we come down, so maybe somewhere in here around that 2322 area. Then we'll see what happens from there, but that would still be a lower low from this previous low. Moving over to some stocks that were moving this week, you can see Pepsi. We had this longer term downtrend. We broke that structure, retested, rallied up, got all the way up into the 180s, and then pulled back here to 175. I think this is an initial test. I think we're probably going higher here on Pepsi. In terms of price targets, I think you could at least get to that 186.50 area. That would be your high back here from November of 22. They had really strong earnings and they popped on that, and then you can see a series of higher lows. Looks good. And then looking at Lululemon, this has been a bit of a dumpster fire. Big down move here, and then they had earnings, which sent them all the way down to the 330s. Those were levels that we hadn't seen since May of 23, so significant down move, falling knife for sure. But you can see 2 weeks in a row of bullishness here. Momentum starting to roll to bullish. Seems like this has at least enough legs to get to that 385.80 level. That would be kind of this consolidation high back here from July and August of last year before we had that really big move higher. So it's back above the 200. That could be a breakout as well. Looking for that move higher. I think both of these have some decent opportunity over the next week. Moving over to the Mag 7, you can see we've been in a little bit of consolidation and down move. We've seen this before, and we had consolidation down move here December of 21. And then we went much lower, counter trend rally, and then went much lower again. So is this the start of something like that? Certainly possible. Does seem to be showing some weakness here in the short term. You can see momentum bearish, RSI doing the same thing, looking to push for that SMA. And then I want to highlight this trend line here. You can see marks a bottom here in October of 22, and then we kind of established that trend line here in March of 23. Tested again here in October of 23, and then we tested it again here this last week, and that did find a little bit of support. We didn't quite get there 2 weeks ago, tested it this week, and then we'll see if we can get up to that upper trend line. That would give you a price target basically at the highs, 367.10, and then we'll see what happens from there. If that is a double top, maybe you see consolidation and a bigger breakdown with your midpoint here, and if that happens, then you should at least expect to get to that 300, 301 area, and I think the 55 EMA is probably going to trend in that same direction, get into that 301, 302 area by the time we start to see that bigger breakdown. And then we'll see what happens if we bounce from the 55 or if we cut right through it and head to the top of this consolidation lows down around 267. If that happens, obviously markets are going to be headed much lower. So again, still fits with that same thesis, short-term bounce. We'll see what happens at that resistance. And you can even see it on the volume profile here, a little bit of volume, resistance here. And if that area breaks, then potentially headed all the way down to this most recent consolidation, which would be right in that 267 area. Moving over to Apple and Tesla, both of these had a really good week, 2.6% and 14.4% for Tesla, absolutely massive. Apple hasn't had earnings yet, so we're waiting to see what that looks like, but it's been in a downtrend, continues to hold this 144 EMA, hasn't actually tested it yet, but it's right in that zone. 163.93 is the current level. Momentum seems to be rolling to bullish. We're still holding that 165.71 level. We'll see how that plays. But we have their earnings eventually, and that'll dictate price once we get it. But for right now, still a downtrend, showing a little bit of potential bullishness up to VWAP, which is at 176. And then looking at Tesla here, you can see similar setup. It's been in a down move. Got all the way down to the trend line here on earnings. And then we had a massive move higher on that robotaxi news and the news of a potential cheaper vehicle from Tesla. And then we rallied right back to the next level, 167. We'll see if that level holds. Still very much a downtrend. We haven't tested that. We haven't gotten to that price target from this down move, bear flag down move. Seems to be holding structure right now. Could absolutely reject from this area, hit the 9 EMA on the weekly, but that's a strong candle and you do have to respect it. 14% is very strong. Didn't quite engulf the previous one that was also down 14%, so definitely some volatility, but you can also see the volume on that up candle. I would argue that there's probably a little bit more room to the upside on Tesla. Moving over to Microsoft and Alphabet, I did individual videos for both of these stocks over the last week. But you can see they're on massive runs. Alphabet had a really strong earnings, 11.5% to the upside, almost hit this upper trend line. That's the price target right now, up around 180.70. And then Microsoft had a decent earnings. It was up on the week. It held the 21 EMA. Momentum's bearish. Our size a little bit bearish here. If we can hold this trend line, we'll be in good shape. Maybe we see a rally back up to that 429 area. But it does seem like this structure is getting pretty close to bearish. We've tested it before, similarly here in that July to October move. And then you can see the same kind of setup, dip low, counter trend rally, dip low. We'll see if that double bottom holds the same way it did here, but really I'm looking for that same setup, dip low, double top, bigger breakdown, and then Alphabet, super strong earnings with their dividend, like I mentioned. Price target's still up here, everything looks super bullish. Moving over to Meta and Netflix, you can see both of these had big gaps down on their earnings. Meta a little bit worse than Netflix. Netflix seems to be hanging in there. But it did turn a positive week, 0.43. Could have got into the stock around 415 at the lows. Potentially going to rally up to that 454 area. We'll see how that plays. We haven't filled the gap yet, but it does seem to be gaining a little bit of strength. It still looked like a pretty strong quarter for Meta, but it wasn't up to expectations. It was very expensive in this 520 area. And then looking at Netflix, same thesis, gap down on earnings, consolidating at support. Still has not filled this gap down to that 495 area. Hasn't tested that trend line either, but it does seem to be gaining a little bit of strength here. Could see it bounce, potentially hit that 21 EMA somewhere around the 595 area, and then we'll see how that plays from that level. Does seem like some buying is coming in at this consolidation. And looking at the volume profile, you can see it's right at the lows of this consolidation. We're above that volume profile. So again, another indicator this could be popping to the upside a little bit. Moving over to Staples and discretionary. Staples having a great week, 1.54% to the upside after this move down retest. This looks like a healthier rally now. This was basically straight up. Now we had a pullback. We found support. We rallied up. We got back above the level, 75.40. And comparing this here to discretionaries, you can see the down move. We had a strong candle on the back of that Tesla move, but this structurally looks significantly weaker. Rally, retest, rally, and it looks like we're headed to that 77.50 level, which is the highs back here from May of 23. So Staples looking good, indicating to me that this is a little bit risk off still. Discretionaries continues to weaken. You can see can't even get to that 21 EMA on the back of that massive Tesla move. So you're still going to have resistance around that 178 area as well as that 180 area. We'll see what happens there. Probably going to be a lower high and then a continuation lower. Again, doesn't mean we can't see a couple of weeks of bullishness, but it just depends on how aggressive those are to the upside. Moving over to transports and utilities, you can see transports continues to the downside, but not by much, 0.06. So we had some volume come in. We found some support around that 64.89 level. Didn't quite hit it. Maybe the level should be a little bit higher. Still wouldn't have touched it there at 64.98 though. So right in that zone, seems like we're finding some support. Again, same thesis, probably going to get a little bit of a bounce. We'll see what happens. And then looking at utilities, this one looks a little bit bit more bearish. So we had the big run. We didn't have the moves down like you can see here on transports. So we had move higher, hit the level 66.81. That was an important level. You can see we almost wicked those highs in December of 23. And then last time we had a consolidation right at that level. So important zone, couldn't quite get there in December, touched it here. And now we had a big breakdown, 1% to the downside, fully engulfed the previous candle, looking to push down to 65.75, momentum rolling to bearish, RSI moving lower. So it seems like utilities might be a little bit out of favor here over the next couple of weeks. You would expect to push to at least to that 21 at 65.13 in my opinion. So maybe we're going a little bit more risk on over the next week with utilities pulling back and transports potentially looking to bounce. And then moving over here to technology, we haven't talked about technology as a sector in a while, so let's take a look at it. You can see it's been on a run just like everything else, and then we had 3 weeks of bearishness just like everything else. This was an all-time high for tech as you would expect, and then we pulled back to that 193.60 level, which is the high back here from December. See how it plays. We got to bounce from that level, hit the trend line here, and if this is a trend line retest, we could potentially see a break. Otherwise, maybe we overthrow to that all-time high back around that 211 area. We'll see. Momentum hasn't rolled yet. RSI bouncing a little bit. Structurally, still very much intact on this uptrend. You can see last time we pulled back to this lower trend line. Similarly, we tested it here in March, and if we do break down a little bit further, your trend line support would be down around that 188 area. Moving over to breadth on the 20 and the 50, you can see both of these were quite bullish. Big candle here on the 20. Seems like this is headed a little bit higher. Consolidation of EMAs around that 54, 55 area. And then 50-day breadth, similarly, big engulfing candle, engulfed the previous one. You would expect this to push at least a little bit higher into that 52, maybe even the 55, 56 area around this consolidation of EMAs. So you got to break down, found support, rallying up, probably going to establish a lower high, similar to here, where you had a high, lower high setup, and then we move lower. So we'll see what happens, and that's true on both of these charts. Lower high, big dip low. If we get another lower high, probably could double tap that area. Similarly to here, dip low, rally up, retest the zone, couple of weeks consolidation, dip low again, tested it again, down again. So you had a triple bottom right in that same zone before we had that bigger push up and then consolidation at that level. So definitely seems like we're set for at least a little bit of bullishness, but then we'll see what happens after that. Moving over to 200-day breadth, we see we're still consolidating in this zone. Momentum looks like it's set to roll to bullish. We held the level 69.38. You can see that dip low, wicks 64.74, rallied up, hit the 9 and 21 EMAs. Need to see this continue, get back above 76. Maybe we get into the 90 area, then we'll see. Typically that is the top of markets. You can see it here. We did have a move down, retested it one more time, and then we had that massive move down. Usually when we hit those areas, that is the end of a rally for at least the medium to longer term. You can see that high came in April of 21. And then we didn't get the bottoming here on the 200-day until we got all the way here in June, had a short-term rally, and then we bottomed here in September, October of 22 before we had that bigger rally. So if we get into that zone, that's going to be a pretty big red flag. Doesn't mean that we can't hover in that zone for a while like we did here, but usually once we get there, that is the end of rallies, at least for the medium term. Moving over to the dollar, I just want to highlight the hourly and the daily here for a second. You can see this bull flag, rally up, bull flag, looking for a price target around that 180.50 area. You can actually see on that Friday session, rallied up, retested, rallied up, closed above it here on the hourly chart. So if this is going to rally, you would expect it to happen here pretty soon. And if the dollar rallies super aggressive like it could out of this bull flag, that would absolutely be bearish for markets. And looking at the weekly chart, it definitely seems like this is going to do it. So we had a rally up, tested support. Looks like we're pushing here. That would put us above the highs from October. We're nowhere near the lows of October on equities. So if we see this push, that could absolutely send equities down. I think this is probably the most bearish chart that we're seeing in terms of equity eventually pricing in this move. And the last time we had a breakout of this level, you can see it here. That was a breakout in August, and that took us to that October low of 22, which ended up being the bottom of markets, at least for the short term. So the dollar seems to be set to break out, and if it does, that's going to be quite bearish for markets. So watching the dollar pretty closely here this week. Moving over to yields, you can see yields are basically flat on the 2-year, up just a little bit. Momentum is still bullish, RSI is still bullish. So on the weekly, this seems like it's going to push above 5. We'll see. Obviously, that's going to be dependent on the FOMC. And then 10-year, absolutely on a run. Looks like it's pushing towards that 5 level. And that was the bottom of markets here in October, where we had that big down move in yields. Markets went way, way higher during that time. And markets are still hovering at their highs while yields are starting to push higher. They've been doing it for several months at this point. And I think if we start to push towards that 5 level, I think that's going to spook markets. And then we'll see what happens from there. Moving over to JNK and TLT, you can see bonds had a decent week on JNK, 0.78, got back above that 93.67 level. This has been moving pretty much in lockstep with equities. You can see momentum rolling to bullish. It looks good. Probably going to push higher, at least to that 94.82 level in my opinion. And then looking at TLT, this has been a dumpster fire. We've had yields going higher, TLT going lower, 1% to the downside. It's at the trend, so it needs to hold that if it's going to do it. Otherwise, this is probably pushing to that 85.90 level. Moving over to volatility, you can see volatility cratered. We had 3 weeks in a row of bullish volatility, massive down candle. It is holding support, so you got the 55 EMA, 9 EMA, some horizontal support here at 1470. We'll see if that zone holds. Right now, I probably wouldn't expect it to over the Monday, Tuesday, and then we'll see what happens with the FOMC. If it's going to bounce here on the RSI, it seems like it would need to do it here. It's just a few points above that SMA, but right now looks a little bit bearish. Fits with the thesis of markets going higher on the Monday, Tuesday. Moving over to my accounts, I did pretty well on the week. You can see I was up about $2,000 on the week, so 2%, pretty decent. I finished last week at 128,693, so almost to the penny, $2,000. Decent little profit on the week. And you can see going into the Monday session, I have a covered call here at 197. That's already deep in the money, 198. Probably going to have to roll that out another day to try to collect a little bit more money on that position. And then looking at the triple Qs, I have my 200 shares covered call, again, deep in the money. Continuing to play this, rolling it out. This is actually for Tuesday at 423, so my max profit here at $7 is 430, and you can see we're already $1 above that. Let's see if we get any kind of pullbacks on the Monday session, and then I have a put here for 430. Really, I'm trying to get into a second set of shares so that I can leave this first set alone, let that go to expiration, collect the money. You can see I have a $300 loss, and at current expiration, I should only be at $200, so that $100 will come in over the next 2 days, or I can continue to roll it out depending on what we see. Otherwise, I can do a second set of shares to continue to profit from any up moves that we get in the short term. I do have to go into margin to do that, so I don't like to do it over any kind of extended period of time. But if we're getting aggressive rallies, it is generally beneficial to be in a margin position. And I think that really depends on what we see on the Monday, Tuesday session. If we get that explosive rally towards those most recent highs, that's a pretty decent opportunity, a couple of percentage points in there. So it makes sense to take advantage of that. But right now, I don't think it's necessary depending on what we see on that Monday session. So moderately bullish over the next week. Let me know down in the comment section what you think of the economy and the inflation data right now, or what you think the FOMC is going to say this week. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.